Sarabjit is quite depressed by the performance of mutual funds in which he has invested. He is constantly thinking of exiting some of the funds. Before taking any decision, Sarabjit thought of discussing it with his financial advisor. He quickly picked up his phone and asked what was happening to his portfolio. Should he sell some of his schemes? This question troubles several investors like Sarabjit, and most of the financial advisors suggest sticking with the investments. Even when there is turmoil in the market, however, in some cases it's better to exit the fund. So, how can you assess whether you should remain invested in a scheme or exit? Sarabjit's financial advisor suggested even if the financial goal has been achieved, many events should be seen as a red flag for your portfolio. Like managers change continuously. You should avoid investing in funds if there are changes at the senior management level again and again. Usually, people look at the funds but they don't focus on who is the manager of the fund. But you should also stay updated with the news related to the fund manager. A change in manager can affect your returns. Well, there is another that comes in play, which is standard deviation. Rise and fall in the fund is decided by the standard deviation. It says how much your fund return is deviating from the historical average of the scheme. A low standard deviation indicates there is less volatility in return, which is good for the investors. A higher standard deviation suggests that fund's performance is not stable. In such cases, it is better to exit the funds. Now let's come to the performance. If a fund is continuously performing badly, then you should leave the fund. If a fund is performing worse than its comparable funds, then it's an indication that you should quickly leave the fund. In the end, it can be said that if a fund is not achieving its target, then it's always advised that you should adjust your portfolio and exit such funds. Now, it is quite easy for Sarabjit to decide. Still, he wanted to take an expert opinion. Proficient Equity Private Limited founder and director Manoj Dalmia says that if fund is underperforming the benchmark index for a long time, or if you have achieved your target, or if it is 5 to 6% less than that, even then you can exit the fund. Money9 suggests. We suggest that an investor should not leave the fund if there is a loss in just the short term. Returns given by mutual funds should not be the only criteria to assess their performance. If you are investing in a mutual fund, then you must look at your target. You must also consider capital gains tax.